Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Thursday morning and lots of cues to digest. The cues coming out of global markets are fairly negative, and of course lots of stocks in focus. And we'll also be talking about the mega Bollywood release this Thursday. Shah Rukh Khan-starrer Jawan has hit the theatres. We'll be talking about that as well. And of course, we'll also be getting all your stock-related queries answered by our experts on the show. So if you have any queries, send them in to us on our YouTube feed and we will have them addressed. But before we go any forward, let's take a look at the top headlines at this hour. Well, concerns over the Fed sticking to higher for longer rates due to strong economic data drag Wall Street for the second session in a row. Nasdaq was the biggest underperformer, ending lower by 1%. Meanwhile, Asian markets trade mixed, while the GIFT Nifty is implying a lower start for the Indian market. Oil prices continue to rally. Brent crude holds above $90 a barrel amid supply concerns post extended output cuts by Saudi Arabia and Russia. Tech giant TCS signs a 5-year deal with Jaguar Land Rover valued at $1 billion for a wide range of services. Now, this is the third $1 billion plus deal to have been announced by an IT giant this quarter. And among stocks in focus, we have the likes of Paytm as well as Lupin. There are developments around these two stocks. We'll be talking about them and a whole host of other stocks that we will be watching out for and we'll be taking or addressing in the show today. Well, let me bring on board our first guest for today. Our technical guest is Kunal Rambhia, who's, from the streets, joining in this morning to talk about the technicals and to take stock of some of the stocks that will be in focus. Good morning, Kunal. Great to have you on the show. Well, let me begin by asking you about the Nifty, given the fact that we have clocked in a 4-day rally, but the global cues are fairly downbeat and looks like we are set for a gap down open. What are the charts saying on the Nifty for today as well as the bank Nifty going forward?
Very good morning, Nandita. Thank you so much for having me on the show. So if you look at the Nifty, the overall performance has been pretty fair. The first breakout was seen on the chart on 1st of September when the Nifty managed to close about 19,500. I'm talking about the futures levels. And since then, we saw a clear uptick coming in. As you're saying, yes, the negative beginning can probably be a buying opportunity. Reason being, in an uptrend, we generally look out for the higher tops and higher bottoms. So probably a downtick from here can be a good buying opportunity. The support to watch out on the Nifty futures will be 19,550 to 19,575. And on the Bank Nifty, again, the sideways consolidation has given a kind of positive momentum, at least in the last 2 days. The breakout to watch out will be 44,850. Above that, I think both the indices will give us a clear directional movement, and I remain bullish buying on dip can be a good strategy from here on.
All right, buy on dips could be a good strategy going forward. With that, Kunal, hold that thought. We'll come back and talk to you about specific stocks that are in news this morning. But let me also bring on board, Karan Tarani of Elara Capital joining in at this current juncture to talk about the mega release. This Thursday, Jawan has hit the theatres. In fact, it was a highly anticipated Shah Rukh Khan-starrer movie. And, there's hysteria around it. There's a lot of craze around this movie because, experts believe that it could pip Pathan, the box office record set by Pathan as well. Good morning, Karan. Great to have you on the show. There are expectations that this movie could net somewhere around 100 crores on the first day itself. Tell us about what your expectations are from this movie.
Hi, Nandita. Good morning. So I think in terms of broader expectations, for the first day, we are estimating a net box office of about 60 to 65 crores. Now, this is particularly Hindi and the dub versions. In terms of lifetime, I think the film could reach the mark of 350, 400 crores, provided the content does well. But as far as the opening is concerned, I think it's a very huge blockbuster opening. In terms of numbers, if you look at the recent films, I think Gadar has reached 500 crores net box office Hindi. Jawan was somewhere closer to that number. So as of now, our estimate is around 400 odd crores, but depending on how the content picks up, how the word of mouth is, the films could reach that kind of level. But the one good thing to watch out here is that, this is a film which will have a pan-India appeal. It will have an appeal to the Hindi audience and the regional audience because there are large regional actors in this film, in the likes of Vijay Sethupathi and even the director, the regional director, Atli. So I think in terms of a recall, this film will have a wider recall as compared to a Pathan or a Gadar, who which appealed only to the northern circuits as such.
All right, let's also talk about how what this really means for the stock of PVR going forward. You know, it had already clocked in record footfalls in the month of August during the Independence Day weekend. You know, this quarter is expected to be good given the fact that we've seen releases like Rocky or Rani, Gadar 2 now. Jawan, and in the coming quarter there are quite a few movies, big ticket movies set for release. So what are the expectations from the next couple of quarters from PVR going forward? Do you think it's up for re-rating now?
Yeah, so I think we had upgraded the stock about 3 weeks ago, wherein we did see a trend that there is a change which is happening in Hindi content. One big thing which has happened rather is that we have changed the type of Hindi content. The type of Hindi content that we're seeing nowadays is either VFX driven or it is franchise driven, wherein it is part one, part two, ONG two, the two kind of things which are there. Or the film is original in nature. I mean, the films are not like a remake of any South or English movie. So there is differentiated content coming on the table here, and that is kind of pulling the audience in larger numbers. And this effectively could have a big positive impact for the multiplexes because it is Hindi content which was lacking in the post-COVID era. And Hindi content drives profitability, whether you look at ticket price, whether you look at advertising, food spends, Hindi content is very important to make a comeback. So thankfully, I think Hindi content has made a comeback in terms of occupancy levels. We have reached pre-COVID levels, at least in the month of August because of Qadar and Oh My God 2. Now, the problem here is sustainability from here on. That is the key moderable. Now, also one more thing which has happened structurally is that, our dependence has increased on large budget films. So in the pre-COVID era, we probably had about, 30, 35 films, doing well. Out of that, 15, 20 films were medium budget and 10, 15 films were large budget in nature. But if you look at the situation in the post-COVID era, small, medium budget films are not performing at all. I mean, they are reporting a 50-60% decline versus pre-COVID era in terms of average box office even today as we speak. So the dependence has increased on large budget films. If you look at the Hindi box office, close to 85-90% of the box office today is coming from large budget films in terms of contribution. So we are depending more on these kind of films, and thankfully over the last 1.5 months, these kind of films have performed at box office. But these kind of films performing consistently is quite a big ask. But nonetheless, I think we've got a reasonable amount of lineup coming in the OND quarter, which is festive at Diwali. We've got a franchise series of Tiger film, which is by Salman Khan. We've got another film of Shah Rukh Khan, which is coming, and we've got 2-3 more large budget films coming in as well. So I think in a quarter, if you have maybe 2 or 3 large budget films doing well, we will kind of move on to the pre-COVID levels in the box office collections.
All right, Karan, before I let you go, I want to say that, of course, I was just reading some reviews of this movie, Jawan, and it's already being dubbed as the best SRK movie till date. When are you planning to catch this movie?
Planning to catch this up today. So, as I said, generally, if you look at Hindi films, you never see a collection of more than 3 to 4% coming from dub markets. In the case of regional, even 40-50% of the collections come from the Hindi markets. So this is the first film wherein you could have a very big blend in terms of Hindi and South. And, if the regional version picks up, the dub version picks up in South, this number could go anywhere. I mean, it could even beat Pathan for that matter.
All right. Of course, we will be watching out for how the box office collections pan out for this one. But with that, Karan, thanks a lot for taking our time and joining in this morning, and putting things into perspective for us. With that, let me go back to Kunal then and talk about specific stocks that are making headlines this morning, starting with Paytm. Now, my colleague in CNBC, Yash, has reported that, Paytm has dropped its plan to start a, insurance business. In fact, it has no plans to enter any other line of financial services business. That's as per sources. And the focus for Paytm is likely to be on payments and credit disbursement going forward. If you look at the stock, most of the brokerages are of the view that, the stock could hit somewhere around 1,200 to 1,100 rupees in the, over the next 12 months or thereabouts. But on the charts, 938 is a 52-week high, Kunal. In the coming sessions over the short to medium term, where do you expect the stock to head from here?
See, Nandita, if you look at the overall formation of the chart, then obviously the first we saw a massive decline that was somewhere near to the extreme lows of 435. And since then, this counter is making a clear high top, higher bottom formation. And if you look at the broader formation, the first high was somewhere in the month of August 22, where it made a high of around 845, 850. Since then, it was in sideways consolidation. Now we are witnessing a new breakout coming in above 900. This counter can easily go to 1150 to 1200 levels. It's a positional trade. Positionally means we can keep the target of around 2 to 2.5 months in our mind, and one can initiate a buy. The positional stop loss on this will be 800, but yes, with the stop loss of 100 points, we can expect at least 300 to 400 points rally from the present levels.
All right, expect 300 to 400 kind of point rally on Paytm going forward. But, I want to quickly get in your thoughts on the sugar pack. It was buzzing yesterday. Sugar prices are, of course, at a high, at 6-year high, if I am not mistaken. And stocks were, raking in sweet gains in yesterday's session. We have a couple of queries on our feed as well. Vivek Kurup wants to know your thoughts on the likes of Sri Renuka Sugar. We saw EID Parry was among the top gainers on the Nifty 500 index as well. How should one trade into the sugar counters at the current juncture?
So, Nandita, as you pick up the sugar sector, the first stock which I was going to discuss was Renuka Sugars itself. And the only reason being there was a broader sideways consolidation and the breakout came just 3 days back at around 48.5. Now this counter is trading at 53. I think this is a massive consolidation breakout and the counter has the potential to reach till 62 to 63 levels. So yes, one can initiate a buy at 53 also, a little bit on decline till 51. The stop loss can be 47, expecting the target of around 63. And the second, which you mentioned, was EID Perry. If I look at the overall formation, again, it's amazing. It's sideways consolidation. The breakout has come yesterday itself. That's at 520. One can initiate a buy above 525 now. The stop loss on this counter can be 500. And the first conservative target on this counter can be 575 to 580.
All right, that's the view on the sugar stocks then. Let's talk about some electronic manufacturing firms as well. Given the fact that we have a positive report on CLSA coming in on some of these companies. In fact, CLSA has initiated overweight rating on the sector. On Amber Enterprises, it has buy rating, target price of 3,650 rupees per share. On Dixon Tech, outperform rating, target price of 5,675 rupees per share. It expects India's EMS industry to deliver a CAGR revenue of somewhere around 22% or thereabouts over the next decade. So a very positive view coming in on some of these electronic manufacturing services companies, and they have done fairly well for themselves. Among this pack, Amber, Dixon, anything that you like at the current juncture?
See, if you look at the overall formation of Amber Enterprise, then yes, it's looking amazing. In fact, the recent run up from almost 1850 to 1900 levels till 3000 was one-sided rally. In fact, so yes, one kind of a pause from the present level is likely. A decline till say around 2800 can be a good entry on the Amber Enterprise. If you look at Dixon Technologies, the formations are again very attractive. The counter is almost reached near to the previous high, which is 5000. I think 4500 to 4700 can be a good zone to think of accumulating Dixon with the target of 6,000 kind of levels. But for now, I would avoid these counters because they have run up in the recent past. So risk reward ratio becomes little unfavorable. Let's wait for some correction to come in to initiate a buy.
All right, wait for some correction to come in before looking at some of these electronic manufacturing services companies. But let's also take up some queries that are trickling in this morning. The first query is coming in from Nisha Pradeep, wants to know your thoughts on Lupin, Kunal. There has been a development, of course, it has tied up with Mark Cuban's cost plus drugs to supply, drugs to patients in US. Lupin in the Pharma pack has done fairly well. In fact, the entire Pharma pack has been doing extremely well over the last few sessions. Look at Lupin, it's somewhere around 4% up in a matter of 5 sessions. At 1139, it's literally very close to its 52-week highs. How should one trade into Lupin right now? Should one buy, and if one holds, should one book profits or continue to hold at the current juncture?
So, Nandita, being honest, this counter is one of the best formatted counter, I would say, on the technical front. The extreme high from 2100 to 2200, this counter came down and made a low of around 585, double bottom at near to 585, and now this counter is heading for a new breakout, which is about 1250. So if our viewers' view is very on the short-term nature, then be a little cautious near to 1200 mark. I think a kind of profit booking may be seen. But otherwise, structurally, this counter is poised for a new rally about 1200. We are positionally bullish on the counter with the target of 1550 to 1600 levels. That may take little time because I'm referring to higher time frame charts. But short term ke liye, the target can be 1200. Positionally, the target can be 1500 levels.
All right, that's the view on Lupin. Hope that answers your query. But let me take up a query on Apollo Tyres as well. Hari Shankar wants to know whether or not it's a good time to look at this stock. Apollo Tyres has, slowed down a bit over the last 1 month. It has shed somewhere around 12% or thereabouts. Would you say that this, dip is a good opportunity to buy into this stock?
See, on the Apollo Tyres formation actually got spoiled on 11th of August when the counter came down by almost 8.5%, and since then this counter was in clear downtrend. Yesterday at the second half, there was a sudden spike on the counter and the counter recovered from the extreme low levels. The support for timing on the counter is 380 itself, and yesterday it has managed to close at 384. So for a day or two, if it sustains about 380, then one can initiate a buy on the same. It's going to be a risky bet because the trend is negative and we are going against the trend. So the stop loss will be 375, and one can think of initiating a buy on this with the momentum of still say around 410 to 415. I would not really be keen to trade on this unless it gets into sideways consolidation. But if there is a specific requirement of looking at it, then one can definitely keep an eye with the stop loss of 375.
Before I take up any more queries, Kunal, I want to get in your thoughts on the IT pack. We've seen a very good recovery come in on some of these IT names like TCS and, the likes of HCL Tech as well. There is news flow that TCS has entered into a strategic partnership for, for the digital unit of JLR to develop, their digital services. This is the third $1 billion plus deal announced by an IT giant over the last month or so. Do you think it's a good time to get into these stocks?
Absolutely. In fact, TCS gave a first breakout on 4th September itself, where there was a falling wedge formation, and we initiated a buy on the same. The stop loss for this position right now is placed at around 3,400 on the closing basis. Yesterday, it managed to close at around 34, 25, 30. One can definitely look at this counter. The positional target on this can be 3,550 to 3,600. And the another IT name, which I really like the most at this point in time, is the Wipro. If you look at the broader consolidation, there was a breakout on the chart. One can definitely look at Wipro from positional point of view. The stop loss can be 415 to 20, and the positional target can be 465 to 470.
All right, that's the view then coming in. But let me talk about some railway stocks now. Of course, railway stocks have been flying high. May have come under some bit of profit booking yesterday. Anil has a query on the railway pack. I'm sorry. He wants to know whether he should hold on to stocks like IRCTC, RVNL, and RailTel at the current juncture. Would you say it's time to book profits, or would you say hold on to it for higher highs?
So the interesting part to watch out in the market is whether you are a trend follower or you want to trade for short-term momentum trading. So yes, short-term, there was a kind of profit booking on IRCTC. Since last 3 days, it's struggling near to 705, 710. But if you look at the trend, it's really very strong. In fact, it's not even reached the 52 weeks high, which it made somewhere in the mid of 22. That was precisely in November 22. So yes, we are onto it. The trend is really positive. A decline to say 690s kind of levels can be a good buying opportunity again. So if your view is very short term, then yes, you can definitely book out at the present level of 710 to 15. But if you're looking at the positional trade on the same, it's a buy on dip counter. The positional target on this remains open till 740.
Right, that's the view on the railway pack. Hope that answers your query. But let me take up a query on the telecom space as well. Vodafone Idea saw a great, set of great move coming in yesterday. But we have a query coming in on Tata Tele as well. Deepak wants to know your thoughts on this stock. Between Tata Tele and Vodafone, do you think there is any trade in any of these counters?
See, before we speak about these counters, let me just remind our viewers and investors that we'll have to be a little cautious and take an exit if the momentum, fizzles out. So Tata Tele definitely poised for a good formation, a good rally. The formation on the chart is kind of a flag formation. The breakout is pending at 98, 93.5. I think above 93.5, it can open the door still around 99 levels. And when it comes to Idea, again, the formation is really very encouraging because it's making a clear higher top, higher bottom formation. I think the targets of 12 plus are very much likely on the counter. But again, as I mentioned, just make sure that you maintain your risk reward ratio here and take an exit if your stop losses are triggered on these counters.
Right, exercise caution when it comes to some of these stocks. But let's take up a query on the OMC pack as well. There is a query coming in on IOC from Puneet and wants to know your thought on the OMC basket, particularly IOC. But OMCs have seen a correction coming in, given the fact that we've seen a resurgence in crude prices. And they have tumbled somewhere around 10% if you talk about the monthly move. Should one avoid these counters at the current juncture, given the fact that crude experts are saying that could retest somewhere around $100 per barrel mark as well?
So, as you know, the trend follower, as I said, whenever there is a correction, we generally think of initiating a buy. IOC is one of such counters which we recently shortlisted. The only reason being, we saw a good run up on the IOC charts from June 2023, where it made a bottom of around 89. From those levels, it went to as high as almost 100 levels. Recently, it just came back to the previous level itself. And this week, it's up by 2.5% so far, making a bullish candle formation. So one can definitely shortlist this counter for positional trading. The immediate breakout on this counter can be 92.5 with the stop loss of 88. One can definitely look at IOC, but remember, the momentum is as of now missing. So it might just take little more time, but it's a perfect bet from risk reward perspective with the target of 100 plus. Again, one can think of initiating a buy.
All right, that's the view on the OMC basket. But let me ask you, about your views on a Varroc Engineering. This stock is in focus, given the fact that it will be acquiring 26% stake in AMP Energy's special purpose vehicles. And it will be establishing renewable power plants in Maharashtra as well. The stock has done pretty well over the last 1 month, but in the last couple of weeks, it has lost some steam. Are you looking at a trade here, Varroc Engineering? Where is it headed from here on the charts?
So Nandita, honestly speaking, again, I'm very bullish on this counter and I'm monitoring this counter since pretty long time. But if you look at the historical data behavior, Feb 2020, counter was somewhere near to 450 and from there it tumbled down. Again, it reached the same level in Feb 21, Feb 22, March 22, and recently again, it's near to those 450 levels, 430 levels, and again showing a bit of momentum missed out. So for time being, stay cautious on this counter, but the day it crosses 450 mark, I think this entire broader sideways consolidation will enter into a new uptrend. One can think of initiating a buy near to those levels. Short-term trading, one can initiate a buy presently with the stop loss of 405 with the target of 445. But just make sure that we exit our position near to 450 and wait for the closing above 450. Closing above 450 can, I think, open the doors till 700 to 750.
Right, that's the view on Varroc. Bullish view coming in on that stock. But let me take up a last query for today. This one is coming in from John on Ashok Leyland. The stock is close to 52-week highs, but I think over the last 5 sessions or thereabouts, it has been seeing some bit of a profit booking. If somebody has positions in this stock, should they stay put? And if yes, what kind of a time horizon should they look at?
See, this counter lost momentum somewhere from mid of August, around 15th of August, and then sideways consolidation entered into a downtrend for now. So immediate support on this counter is 180. Closing below 180, I think, can push the prices down till 170 levels. So short term, we need to be cautious. Stop loss has to be maintained near to 180. Closing below 180, one should take an exit on the same. But if you're a positional trader, definitely hold on to it. I think 170 to 175 can be a good level to keep adding this counter with the positional target of 220 levels.
All right, that's the view on Ashok Leyland. Hope that answers your query. And this wraps up our query segment for today. But before I let you go, Kunal, any stock recommendations for viewers this morning?
Nandita, I'm looking at the ITC. I think ITC has done fairly well in last 2 days. And if you look at the momentum with the volumes, the counter has really come up big way. So one can initiate a buy on ITC. Stop loss will be 437. I think this counter has the possibility of reaching till 465 to 470 in the near term. And the second counter is New India Assurance. I think this counter is also given the breakout on 22nd of August. The breakout was at 128. Weekly charts are suggesting extreme strength in this counter. I think 155 to 160 can be a positional target on New India Assurance. So these are the two counters to watch out from short-term to medium-term perspective.
All right, those are the stock recommendations from Kunal. With that, Kunal, thanks a lot for taking out time and joining in this morning and, of course, addressing all our viewer queries as well. Well, with that, we've come to the end of this edition of Morning Trade. From me and the entire team, thanks a lot for tuning in. But of course, don't go anywhere because coming up next is Opening Bell.